Hello, friends! Welcome back to EA Capital's YouTube channel, your go-to destination for simplified financial education and holistic growth. Today, we're diving into a treasure trove of insights from the book 100 Baggers, Stocks That Return 100 to 1 and How to Find Them by Christopher Mayer. We'll be exploring the 12 key criteria he outlines for identifying potential 100-bagger stocks. So whether you're a seasoned investor or just starting out, buckle up because this could be a game-changer for your investment strategy. Point 1. High returns on capital employed and reinvestment. When researching a company, look at its financial statements to ensure it consistently earns high returns on the money it puts to work. This means the company is not just making money, but is also smartly reinvesting those earnings back into the business, creating a cycle of growth. Point 2. Research with a focus on finding 100 baggers. When researching a company, instead of just skimming the surface, go deeper. Focus on understanding the fundamentals of the business, growth prospects, and competitive advantages of each company. It's about quality over quantity in your research. Point 3. Consistent double-digit sales and earnings growth. When researching a company, focus on finding a company that consistently achieves double-digit sales growth year after year, accompanied by similar or higher earnings per share growth. Make sure that sales growth is always accompanied by similar or higher earning per share growth. This trend indicates a robust and healthy business trajectory and a worthy investment candidate. Look for consistent performers. Point 4. Lower price earnings multiples preferred. A lower PE ratio might suggest that the stock is undervalued, presenting a potential entry point for investors seeking good value. Also, entering a stock with lower price to earnings multiples offers scope for PE multiple expansion, which can propel the stock price up. Point 5. Twin engines working simultaneously. Imagine a company experiencing not only growth in its price earnings multiple, but also an increase in earnings per share. This dual growth, known as the twin engines, can propel the stock to greater heights, making it a potential candidate for significant returns. In his book, Christopher Mayer gives example of MTY Food Group, where EPS growth was coupled by PE expansion, and the stock multiplied more than 100 times. Point 6. Economic moat and high margins. Mayer says that if a company has consistently maintained high returns on capital employed and high margins for over a decade, then this indicates an economic moat and a durable competitive advantage that protects the company from competitors. Point 7. Smaller companies preferred. Consider investing in a smaller company rather than a giant corporation. Smaller companies often have more room for growth and agility in adapting to market changes. Point 8. Owner-operators preferred. Imagine you find a company where the founder is also the CEO and has a substantial stake in the business and is actively involved in its operations. This alignment of interests suggests a strong commitment to the company's success. Point 9. Patience is the key. Picture yourself investing in a company and resisting the urge to constantly check the stock price. Mayer's advice is to buy right and sit tight, emphasizing the importance of holding onto your investments for the long term while just keeping a watch on business fundamentals and future growth runway. Point 10. Focus on business fundamentals, not social media noise. Consider a company you have invested in whose fundamentals and financial health are strong. So even if there's chatter on social media about short-term fluctuations, and its stock has fallen more than 20% already, you don't need to sell the stock if the fundamentals of the business are intact. Stick to the basics of the business rather than getting swayed by the noise. Point 11. Luck helps. Think back to the success of a company like Apple, which launched groundbreaking products like iPhone, iPads, and entered new markets. No one could have predicted this would happen back in the year 2000. So, sometimes, luck plays a crucial role in the extraordinary success of a stock. Hence, investors should always remain humble. Point 12. Be a reluctant seller. Here, Christopher Mayer quotes Ronald Read, who worked as a janitor but died a millionaire simply because he consistently bought quality stocks with his small savings and was a very reluctant seller of stocks. He never worried about short-term market fluctuations. He owned quality blue-chip American stocks and held those stocks for decades, letting the magic of compounding work for him, which turned him into a multimillionaire. So, there you have it, the 12 points to identify potential 100-bagger stocks, straight from Christopher Mayer's book. Remember, these principles are timeless and can guide investors, whether you're just starting out or looking to refine your strategy. If you found this summary valuable, don't forget to like, share, and subscribe for more insights into the world of finance. Until next time, happy investing! For a one-to-one discussion with a highly experienced and knowledgeable finance professional at EA Capital, who always keep your interests ahead of everything and work in a completely transparent manner, You can write to us at info@eacapital.in and one of our team members will get in touch with you.